So today I'm going to show you how you can make money trading online and become financially free. Now this strategy made me double my account every month in the last couple of months. So it's a whole new strategy that I recently have been destroying, and if you stick around until the end of the video, I'm going to show you how I take my profits as well. So let's get right into the strategy, and here it goes. So for this strategy, we start on the 1 hour chart, then continue on the 50-minute chart, and we take the trade between the 1 and the 5-minute chart. Now on the 1 hour chart, we want to identify a bearish trend. So here in front of me is the Kiwi USD, and now to identify the trend, we simply go to the indicators and we look for some EMA cross. You can either take the 50-200 or the 20-50-200. It doesn't really matter. I'm just gonna take the 50-200, and we can see here the blue line in my case is the 200 EMA and the orange line is the 50 EMA, meaning the 200 EMA is above the 50 EMA, thus the trend is bearish. And if we zoom out here a bit, we can see here the cross. This is the sign that the market turned bearish, and here in this case we could go to the daily and see that the market has been bearish overall. So back to the 1 hour chart. Now we have identified that the trend is bearish since here was the cross between the 50 and 200 EMA, and we continue to trade below the 200 EMA. So now after the cross between the 200 and 50 EMA, we can see the market sometimes comes back to retest the 200 EMA. Here we had once, and here the twice almost came close but didn't really hit it, and here kind of 3-4 touches that came pretty close. Now usually we don't want too many touches at the 200 EMA. The third touch is always a good sign that the market will continue. Here if we take this one, we only had one, so for now the market can still continue to go much further to the downside. And now we want to identify a trend line, which would be here, and look for 3 touches just to be sure that the market continues to the downside, since the third touch is always a sign that the market will continue towards this direction. So here we had the 1 touch, the 2 touch and the 3 touch. So here is our sign that the market will likely go to the downside from here. We clearly see here the structure break where the market touched the 200 EMA, broke structure, went for the retest, formed here kind of a new low, here formed a new structure. Here was a false breakout just to trigger some stop losses, since probably a lot of people entered a short right here that looked probably something like this. And then the market came back and probably some people entered here as well, and the market triggered some stop losses here again, and a lot of people came in to lose money. So this is why we wait for a confirmation that the market will go lower. Here the first confirmation is the trend line on the 1 hour chart, the 3 strike trend line or 3 touch, whatever you want to call it. So now on the 50-minute chart here, if I quickly get rid of this right here, now the market here moves sometimes below the 200 EMA, sometimes above. So we have here a lot of crosses as well. So the market is whether bearish nor bullish. Most of the times it's sideways. This is why it's hard to determine where to enter our trade, or whether the market is bullish or bearish. We have now determined on the 1 hour chart the market is bearish, so we still want to go for sells here or shorts, meaning the market is bearish. And now if we draw here the trend line on the 50-minute chart, we can see it much clearer. So we can see here the trend line much clearer, and what we see here as well is some kind of a double top. And if we add the MACD, we can see here the divergence, which is often what happens with a trend line, that we have a double top at some point, here a divergence, and then the 3 strike trend line. So now on the 50-minute chart, here was the trend line touched the third one, and here a bit of a double top, even though this one was slightly lower, so not really usable as a double top, but it's still kind of a slight indicator if you're more experienced. But now what we want to look for is some bearish signs on the 50-minute chart. So after our third touch, we now look for this bearish sign, which is this fully closed engulfing candlestick, and at the same time we can see the MACD here had this cross between the blue and the orange line, while the MACD here started to turn the color from green to red, which is our first sign that the market here will go to the downside. So first this fully engulfing candlestick, here the MACD turning red, and here we can see the RSI turning below the 50 levels, meaning we have here three indicators that the market is turning to the downside. Now, plus adding our third touch on the 1 hour chart and here on the 50-minute chart, it's our four kind of indicator that the market will go to the downside. Now, usually one engulfing candlestick is not always enough, but it's a good indicator that the market will continue. But what we see here, if we continue to look at the candlesticks, we find here another engulfing candlestick which is fully closed at the downside, because this ones here look pretty nice as well, but we still have here a little bit of a wick at the end. Doesn't mean that you can use them in specific situations, but for this trade I want to see them fully closed at the end. So here we have 1 and 2. This one wouldn't have been too bad, but still this slightly small wick, a little bit confusing and messing up the whole trade. So we want to see this closing candlesticks at the end. Here we have another one, the third one, and if we zoom to the left, we can see here the previous support area, which was retested a couple of times, which here, after we have now the red candlesticks, the MACD, the RSI and the free strike touch on the 1 hour chart, our four signs. Now we want to see the break of this structure, which happened here with this engulfing candlestick as well, fully closed to the end. So we broke this structure here as well, which is our fifth sign. Now what happens here, we see the market goes back for a retest. So now we go to the lower time frame for our entry. So now on the 3-minute chart, we can see here was the structure break on the 50-minute chart, and here came the retest. So now we look for a bearish sign, which here we have again a double top on the 3-minute chart. If we quickly zoom in, we can see here a double top, the wicks pretty much aligning at the same levels, and here we see the MACD and the RSI forming a divergence. So from here on we can see the market goes lower. At the same time we see here the first structure break on the 3-minute chart. So if we take our, so here we see the market forming higher highs, higher lows, and here this was the last higher low being formed after the market formed here the double top and suddenly went to the downside. We saw we broke this structure, went for a retest and continued to the downside, and then here we reached this area which was the 50-minute structure and we broke here. So now we are looking for a trend line from the right side of the double top, and here we can see the first touch was the double top here. This wick formed the second one, and here the third touch, which perfectly came back to retest this structure right here after we broke it. And at the same time we had here a fully engulfing closed candlesticks. We had even two, which is an even better sign. So just quickly, if we zoom in, here we had one engulfing candlestick and the second one. So this whole area is the area that we want the market to come back, and we see here it perfectly came back to retest the two engulfing candlesticks after this structure right here was broken. And at the same time we formed a third touch on the 3-minute chart, which is our sixth indicator. The seventh one was the retest of these engulfing candlesticks after the structure break, which was our seventh indicator. So 6 and 7, and now for another confluence and another indicator to reached number 8, we see here we broke the 200 EMA with this engulfing candlestick, and here we see we took out all the previous candlesticks with this fully closed candlestick below the 200 EMA, which at the same time here we see the MACD cross the orange and blue line, turn to red, and the RSI here turning to the downside. Now we saw the market going to the downside after this candlestick, and we saw the market came back to retest again this area, which here is our entry point. So now where do we take our profits? So the take profit number 1 would be a simple 1 to 2, which would be around here. So take profit number 1. If you feel comfortable trading 1 to 1, some people do, you can take always a 1 to 1, but 1 to 2 is at least 1 to 2. Now the second target is the previous lows of this structure, so right around here somewhere. This is our second take profit, which in this case would be a 3.15, which would be here.